Hi guys, it's Annika here with TipRanks, and today we're going to look at if Google, or let's say Alphabet, is a buy. Many analysts have deemed Alphabet to be a strong buy, and it also has a smart score on TipRanks of 10. And remember, the higher the smart score, so a smart score of 10 is that it is the most likely to outperform the market. Anything less than 5 is likely to underperform the market, and anything over 5 is likely to outperform the market. So let's have a look at what Alphabet's earnings have been and how this impacts the Google stock price. Note the ticker for the stock is GOOGL. The current price for Google is $2,960.92, and the analyst price target is $3,336.60 based on 26 Wall Street analyst ratings offering 12-month price targets. This is a 12.67% upside, and it's deemed a strong buy with 0 analysts deeming it to be a sell. Google actually officially became Alphabet in 2015, allowing its different business units to operate more effectively and more independently so that each of the different business segments can aim for faster growth. Alphabet owns over 200 companies, many companies that we know, such as YouTube, such as Waze, such as Fitbit. There are so many. Let's have a look at their financials for Q3 2021 and how this could impact the share price. Taking a look at Alphabet's third quarter 2021 results, revenues were reported to be $65 billion, and revenue grew by 41% compared to 2020 of $46 billion. EPS was $27.99 per share, and this grew 71% from 2020, which reported an EPS of $16.40. Google also repurchased 4.6 million aggregate shares for $12.6 billion. So net income was $19 billion as of Q3 2021 compared to $11.2 billion as of Q3 2020. So how is it that net income was able to grow faster than revenues? Well, this is because of the operating leverage. As we can see, Google did not increase its operating expenses like R&D nearly as fast as its growth in its top line revenue. The operating expenses were $44 billion compared to $34 billion. This discrepancy was smaller than the discrepancy we saw in the increase in the top line revenue, which saw a 41% increase. Google still spends $7.7 billion on R&D, which is promising for the potential in future growth. In comparison, Apple spent only $5.7 billion on its R&D in its recent financial earnings. Looking at their segment's results, it makes sense that Alphabet's growth has been strong. And this was driven largely in part to the contribution in revenue from Google Services and Google Cloud. Google Services includes products such as Ads, Android, Chrome, hardware, Google Maps, Google Play Search, and YouTube. And Google Services generates revenues primarily from advertising, sales of apps and in-app purchases, digital content products, and hardware, as well as fees received for subscription-based products such as YouTube Premium and YouTube TV. Google Cloud includes Google's infrastructure and data analytics platform, collaboration tools, and other services for enterprise customers. Now, recently, there was a court case between Apple and Epic Games. Epic Games has also sued Google as well. The court ruled that Apple's App Store must allow developers to use alternative methods of payment. Epic Games sued Google under similar allegations and is still currently under court case. So what happened with Apple is that a judge ruled Apple can't prohibit developers from giving consumers links to pay for in-app purchases outside of the App Store, bypassing Apple's 30% fee. While the judge didn't find Apple monopolistic, the company's shares declined 3% on the news, and Google dipped as much as 2%. So Epic also sued Google on similar allegations. However, Google is in a slightly different position than Apple though, because Android allows third-party app stores, whereas Apple's iOS does not. But the Google Play Store, like Apple's App Store, doesn't let developers link out to other payment methods. Naturally, because of this news, we saw the Google share price dip by 2%. But could this be an opportunity for investors to get involved because maybe it's undervalued? Well, the TipRanks Smart Score is a 10, and analyst ratings on TipRanks do say it is still a strong buy. Blogger opinions are also bullish, and news sentiment has been bullish despite the legal case. TipRanks investors, however, are very negative, and hedge fund activity has decreased. However, like we showed you, the technicals are positive, with a 90.18% momentum, and the return on equity is 30.87% for the trailing 12 months. After the dip we saw in Google's share price post the pandemic, we have seen almost an 85% plus incline in its share price, reaching its all-time high despite the fact that we saw the negative news sentiment. Quite interestingly enough, looking at website traffic, despite the fact that website traffic has overall decreased over time, we have still seen consistent increases in the share price. The main risks for Alphabet are finance and corporate, and then the second most are legal and regulatory, as we saw with the recent news. 16% is in tech and innovation, but they do spend $7.7 billion in R&D as of Q3 2021, which improves their chances in that they are providing cutting-edge technology to customers. And most of all, we can still be confident to see that the risk over time has decreased compared to 2018, as the company's gotten more and more well established. And on average, investors allocate 14.49% of their portfolio to Google. There has been mixed reviews, potentially because of the court case. Investor actions, some have increased and some have closed positions and some have reduced positions, but many have increased positions as well. The next Q4 2021 results will be on February 2nd, 2022, and the EPS forecast is $26.97. This is higher than last year's EPS of $22.30, and it is still deemed a strong buy despite the fact that the price has hit its all-time high. And as you can see, Google has been fairly consistent across the years and the quarters in terms of increasing their revenue over time. So what do you guys think of Alphabet and the Google stock? Do you think it is a buy? Do you think it is a sell? Do you think it is largely driven by what will happen with the trial with Epic Games? And if you have any more thoughts, please leave them in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. I'll see you guys in the next video. Bye!